Well, hello, everyone. It's Keith Martin from CAFI. The webinar will start in just a few moments. Thank you. Hello, and welcome to CAFI's webinar on DEI. It's just about to start. We're just waiting a few more moments. Thank you for your patience. Well, good afternoon, everyone, and welcome to this fifth CAFI webinar of 2025 on the fair treatment for a wide range of consumers' learnings and impact on Canadian regulatory landscape. My name is Keith Martin, and I am the Executive Director of the Canadian Association of Financial Institutions and Insurance, or CAFI. On behalf of myself and the CAFI Board of Directors and my colleague and CAFI's research analyst, Robin Jennings, I'd like to thank you for joining our webinar today. CAFI is a not-for-profit association dedicated to the development of an open and flexible insurance marketplace. Our 14 members include the insurance arms of Canada's major banks and credit unions, along with their insurance partners, which underwrite credit protection insurance and travel insurance. Members of the audience, if you have any questions you would like to ask the panelists during this webinar, please send them to us as the host using Zoom's Q&A function, and Robin will pose them on your behalf. CAFI and its members are very committed to diversity, equity, and inclusion, and we met with Swati Agrawal about her work with the International Association of Insurance Supervisors, where she has played a leadership role in international regulatory DEI reviews. I will now turn it over to my colleague, Robin Jennings, to introduce our guest speaker, Swati Agrawal Nevatia, of the Financial Services Regulatory Authority of Ontario, or FSRA. Robin, over to you.
Thanks, Keith. Hi, everyone. Thank you all for joining us today. It is my pleasure to introduce Swati Agrawal Nevatia, Head of Market Conduct for Life and Health Insurance Companies and MGA Supervision at the Financial Services Regulatory Authority, or FSRA. In this role, she directs the development, design, and implementation of regulatory compliance and end-to-end thematic reviews of life insurance companies and their pervasive distribution partners, such as managing general agents, or MGAs. More recently, Swati had a significant expansion of her leadership responsibilities following the passage of Bill 216. The new legislation includes amendments to the Insurance Act that establish a regulatory framework for managing general agents, or MGAs, in the life and health insurance sector. Swati played a central role in laying the groundwork for this legislative development and will now lead FSRA's supervisory approach to MGAs, in addition to her existing oversight of life and health insurance companies. Swati has been responsible for supporting the FSRA CEO and representing Canada at the International Association of Insurance Supervisors, or IAIS. During this, she has led international initiatives related to the Market Conduct Working Group, MCWG, of the IAIS. She has fostered nationwide partnership relationships with regulatory counterparts, members of the Canadian Council of Insurance Regulators, or CCIR, and industry associations to harmonize and collaborate on market conduct reviews. Prior to FSRA, Swati was a manager with KPMG's internal audit for the risk and compliance services, focusing predominantly on financial services clients across North America. She has worked and supervised teams in New York, Philadelphia, and Toronto. She holds a Master's of Business Administration in Finance from the University of Wales in the UK. She is a CPA for the State Board of Colorado and has completed a certificate program on the global leadership in financial supervisions. Very impressive. Just before we begin the webinar, I would also like to extend a special welcome to a number of VIP guest attendees. In addition to many representatives from our 14 CAFI member companies and Fortune Associates, which are key supplier companies to the banque assurance sector, we have VIP attendees today from allied industry associations such as the Canadian Life and Health Insurance Association, or CLHIA, the Travel and Health Insurance Association of Canada, or THIA, and as well from many insurance and financial service regulators and policy authorities, including over 35 regulators and policymakers from the following organizations: the Insurance Council of BC, the British Columbia Financial Services Authority, or BCFSA, the BC Ministry of Finance, Alberta Insurance Council, the Government of Alberta, the Insurance Councils of Saskatchewan, the Government of Saskatchewan, the Financial Services Regulatory Authority of Ontario, or FSRA, the Quebec Autorité des Marchés Financiers, or the AMF, the Financial and Consumer Services Commission of New Brunswick, or the FCMB, the Financial Consumer Agency of Canada, or FCAC, the Federal Department of Finance for the Government of Canada, and the Ombudsman Service for Life and Health Insurance, or OLHI. That is everything. So we will jump right into the webinar. Swati, thank you so much for being with us today. Excuse me, I'm a little sick, so if I cough, I apologize. I have a few questions for you, Swati, and we'll just jump right in. So you've represented FSRA at the IAIS, as I mentioned earlier. Can you provide an overview of the IAIS and their current strategic themes, just for everybody out so we understand?
Definitely. And thank you so much, Robin. You're doing a great job with the introduction. And sorry, I'm a bit under the weather too, but I hope I'm audible to everyone.
You sound great. We're in it together. We can be sick together.
Yes, partners in crime. So when we talk about IAIS, let's first start with what is IAIS. So IAIS is the International Association of Insurance Supervisors. Now, membership to IAIS is voluntary. But if you think about it, there are more than 200 jurisdictions across the world that are members of IAIS. And these jurisdictions together, they constitute 97% of global insurance premiums. So these jurisdictions are regulating entities that bringing the world premium to around 97%. So one may wonder that why is it that a voluntary organization has such a high membership that represents, the world premiums to such a large extent? And the reason for that is that IAIS, it's the only global standard setting body in the world, and that is responsible for developing principles, for developing standards, and for developing guidance on how the insurance sector can be best supervised. Over the last few years, IAIS is shifting its focus just to explain that it's just not about developing the principles and the standards and the guidance, but also as supervisors, how we can best implement on that. And to implement on these, principles and standards, they've actually created 4 core objectives. So I'll just give you a high-level perspective on what those 4 core objectives are. So the first one, it's actually like a cycle. The first one is, at IAIS, they are continuously evaluating what kind of global risks do we see? What kind of trends do we see? What is it that we need to monitor? So that is one. The second thing is, once they see a particular risk, a systemic risk or a trend at a global level, how do we develop, globally recognized standards? So that's the second core objective, that look at the risk and develop corresponding standards, principles to address those risks. The third thing is, once those standards have been developed, how do we, in the supervisory world, in the global world, implement on those standards? So IAIS takes a lot of effort to even support its members on supervisory practices as well as facilitate capacity building. And last but not the least, the fourth objective is that every few years, IAIS goes back and it revisits the consistency in the global implementation of their standards. And while they are doing and assessing the implementation of global standards, if there are any kind of residual risks, what those residual risks result into, are there new standards required? Are there application papers that are required to clarify the existing standards? And the cycle continues. So the discussion that we are going to have today on treating a wide range of consumers fairly that also started a few years back. It started a few years back where, at a global level, there was discussion around how supervisors, insurance companies, intermediaries should conduct themselves such that consumers are treated fairly. That was a risk they saw. Accordingly, they developed a ICP 19, which is Insurance Core Principle 19, that lays out principles on how best to treat consumers. Through the years, IIS has been supporting members on implementing on it. And in the last couple of years, IIS has actually looked into global implementation of ICP 19 and found a gap, especially when it comes to vulnerable consumers, or especially when it comes to diverse consumers, where despite of having ICP 19, vulnerable and diverse consumers were not treated fairly based on some of the examples that we've seen globally. And that resulted in the development of the application paper on how we as an industry can treat a wide range of consumers better. And that kind of explains the process in terms of how IIS follows through its core objectives. Having spoken about the core objectives, these are cross-cutting objectives that go through different themes. So in the most recent roadmap that IIS has, there are 3 strategic themes that are of paramount importance. So Robin, I'd just like to explain what those 3 themes are. I don't think any of the 3 themes would be a surprise to our audience, but the 3 areas of focus for IIS is 1, climate. They want to strengthen supervisory response to climate change. The second is digital innovation and cyber risk. That's how best do we adapt to increasing digital and cyber risks. And the last one, the third one, is how do we as an industry support insurance to serve its societal purpose of building resilience. And that is where the DE&I initiatives come in. So that, Robin, kind of gives a summary of what IIS really stands for, what constitutes its membership, what are the main activities that IIS does, the objectives, through which it moves, and the strategic themes that it has. So I hope that answers your question.
Yes, very much so. And there's a lot in your answer that we'll talk about as the webinar goes on, but that's fascinating. That made me think. So all the things you said, how does this impact Canada or the Canadian regulatory landscape, actually, to be more specific?
That's a very good question because, as Canadians or, individuals living in Canada, that's our first thought process. And when I was representing Canada internationally, I would always bring those understanding back into Canada. So in Canada, as a regulator, when we go out into the sector and we examine the sector, if we are examining an insurance company or we are examining a MGA and doing a conduct supervision, our Bible is the CCIR FTC guidance. That's the Canadian Council of Insurance Regulators, Fair Treatment of Customers guidance. Now, this guidance contains 12 to 13 principles on what is it that is the expectation that we have of the insurers and the intermediaries. What kind of outcomes are we looking for the consumers through each of those principles that are laid out within the guidance? And that is the guidance that we use to conduct supervision, not just at a provincial level, but also at a national level. Because majority of the entities that we are reviewing, they are federally incorporated in Canada. So we do national regulation through the Cooperative Supervisory Oversight Committee, where multiple regulators come together and they harmonize their reviews together. But how this connects to the international world is the fact that the very principles that CCIR FTC guidance has and that we supervise against, they are derived directly from the Insurance Core Principle 19, which talks about the conduct of business. So you can see that just not FISRA as a provincial regulator, but all of us regulators at CCIR, when we do our reviews, the basis of that is within the international standards, the ICP 19 standards. So that, I would say, is more of a formal outlook. But there are also other linkages that we can draw. when it comes to the Canadian regulatory landscape. For example, in this particular process, when we were developing the application paper, we saw examples of consumer harm that were happening in Canada, within the different jurisdictions in Canada. And we shared multiple of those observed examples of unfair treatment of diverse consumers with our fellow global regulators on the IIS platform. And our insights, combined with the insights of other regulators, it has now helped shape the application paper on how supervisors and industry can better achieve fair treatment of consumers. And today, since the application paper is finalized, we are at a stage where we are discussing how to implement the recommendations that are contained within the application paper in Canada, again through CCIR CISRO at a cooperative level. So you can see the linkage that our reviews have been based on ICP 19. The problems that we've seen in Canada, sometimes we take them at an international stage. We try to get some global solutions on it. And once we get some good recommendations, we try to see how to implement on those recommendations in Canada. And last thing, Robin, that I would like to say is that informally, human behavior and human greed, it does not change based on different countries. It's quite universal. So the patterns of misconduct that we've seen in Canada, for example, in one of our recent publications, we spoke about relatively complex products being sold to an unsophisticated clientele. Now, this as an example, we have seen across multiple countries. And when we have access to information from those countries, we get to understand their regulatory strategies. We get to understand their learnings. We get to understand how they've solved those problems. And we are able to bring those solutions and those best practices into Canada. So there's a lot of sharing and learning in the process, which ultimately helps the Canadian regulatory landscape. So that I would say is the interconnection formally and informally with us being represented at IIS from a Canadian perspective.
That's fascinating. Yeah, that's so interesting. I even just as you were speaking, I think I was like out loud, that's so interesting. And sad to hear that greed is obviously a universal thing, but it's true. I think also what you're talking about too is, in relation to fair treatment of consumers, it's about accessibility, it's about inclusion. Could we maybe talk a little bit about those two things in regard to insurance? Could you maybe expand on how the IAIS has conceptualized of accessibility and inclusion, maybe the approach that it took and any examples you guys observed?
That's a great question, Robin. The thing is, when we started this whole exercise around DE&I, we were trying to figure out what does DE&I really mean at a global level. And in talking to different regulators, there was also a stocktake report which we'd gathered. We saw that the notion of DE&I is very much contained at an institutional level. So IIS had this governance working group that was looking into DE&I at a corporate level, at an institutional level, for the common understanding that we have generally of what DE&I should look like institutionally. But then when we had the discussion on the market conduct working group level, there were many thought leaders who expressed that why do we always think about DE&I from a governance perspective, from an institutional perspective? Why can't we think about it from a consumer perspective? Because the consumers that we are serving, they also are diverse. You always don't have like only a typical consumer type or a normative consumer type or a dormant consumer type. You have consumers that also are diverse, that have different needs. You have a variety of consumer base that you're trying to sell your insurance products to. So that is where the idea originated, the concept that why can't we talk about fair treatment of diverse consumers and not just diversity at an institutional level? So when that idea formulated, it was in the incubator and everyone's just thinking about how to implement on that idea. And as regulators, sometimes we can love to be in a room, lock ourselves, and come up with the best rules and the best theory documents of what that should look like. But that's exactly what we didn't want to do. We really wanted to understand that what's the problem that we are looking to solve. So to do that, what we did is IIS has 200 jurisdictions that are represented in IIS. And the Market Conduct Working Group has around 40 to 49 different countries. We said to the representatives in the Market Conduct Working Group that why don't you go back to your regulatory space, to your countries, and give us examples of how consumers have been treated unfairly. Any kind of systemic issues that you have seen in your country, why don't you bring it on the IIS table to this working group? Eventually, we collected a lot of examples from the members that were represented at the IIS Market Conduct Working Group. And when we started looking into those examples, we saw a lot of common themes. We saw 4 common themes that I'll walk you through, but basically, the commonality that we saw through the examples is what then we were looking to solve through the application paper. So we saw all the examples, we all saw the themes, and then we said, okay, what kind of recommendations should the application paper contain such that these instances of harm that we've seen across the world do not repeat, right? So Robin, I'll just give a high-level insight into what kind of examples we saw when we were collecting the examples from different jurisdictions. At a summary level, at a high level, there were 4 key themes that we saw. The first one was targeting of vulnerable consumers. So we saw a variety of examples where vulnerable consumers, now vulnerable is not a set term at the international level, but it could be financially, it could be situational, it could be for multiple other reasons, where consumers were targeted either with, relatively complex products being sold to a very unsophisticated clientele that clearly was not suitable for those clients, as well as we saw aggressive distribution leading to sales, possibly in a very misleading and inaccurate manner. The second theme that we saw was limited comprehension. So we've seen tons and tons of examples of gaps in knowledge, gaps in understanding, or gaps in, misinformation that was provided to the clientele, resulting in negative impacts to the consumers. Especially, we saw that with people who were having difficulties navigating the digital environment, or in general, where the insurers and the intermediaries, they lacked transparency in communicating certain practices, certain characteristics, and risks to their consumers. The third theme that we saw was lack of access to insurance. I think this is a theme that even CAFE has seen over the years, where there are underserved consumer groups who experience an insurmountable amount of difficulty to be able to get the right insurance. It could be factors related to their health concerns. It could be external environmental factors such as political or cultural difference. And last but not the least, we saw concerns around post-sales servicing. We always say that fair treatment of consumers should cover the entire product life cycle, should cover the entire consumer journey. But we saw a lot of examples where claims were being mishandled and it caused potential harm to the very objective of fair treatment of consumers. So that was our process of just wanting to collect real life examples, practical examples, seeing the commonalities through those examples, and reflecting that are the principles of ICP 19 really being upheld in light of these examples? And if they are not, what kind of recommendations can we give to the global audience on how to correct this behavior and how to ensure and get a step closer to treating wider range of consumers better?
Wow. Yeah, that's so interesting and definitely like those are big questions, I think. It makes me think of CAFE, not to bring it back to us, but we conducted a survey for DE&I of our own members last year to gauge sort of their commitment to DE&I. And, from that survey, we found that all of our members, they have well advanced embedded DEI initiative, but we did look at whether that met both internally and externally. So what's going on inside the company, but also to your point about it's not just an institutional level, it has to be beyond that. I bring this up only because I noticed, when we were talking about DE&I, and you use that term, and the paper consultation did begin with the use of the words DE&I. But when it concluded, the final draft, it uses a wide range of consumers. I was just curious if you could, talk about the change of language.
Yep, certainly, Robin. I think you have a great eye to be able to catch these things. But you're right that when we started the drafting of this paper, we used the term diverse consumers. And in the final paper, we introduced the word wide range of consumers. Now, just going back to our fundamentals, across both the versions, the key concept that we intended to convey remains the same. It doesn't change whether we call it diverse consumers or whether we call it the wide range of consumers. And the two key concepts that are fundamental to this work is that one, whenever we talk about a consumer population, that consumer population is not homogeneous. As we discussed, they are comprised of a wide variety of people that can have differences from one another. It's not always a normative or mainstream consumer type. So homogeneous consumer population and appreciating that that exists is the first concept. And that doesn't change depending on the terminology that is being used. The second thing is that we need to understand and acknowledge that in order to carry out any insurance business and to provide insurance services in a way that will reasonably lead to fair treatment and fair outcomes for many various of those people, not only for a certain consumer profile. So that ties back to the first point that because you're not talking about a homogeneous consumer population, any kind of activity which is done right from the design to the distribution of the product to claims handling to complaints resolution has to take into account that there are many diversities and diverse needs of consumers that need to be accounted for when dealing with the consumer throughout the product life cycle. Because of some of the environment that we are in at a global scale, in preparing the final version of this paper, II has decided that we will change the word from diverse consumers to a wide range of consumers because that was just the preferable language to convey the message. But it doesn't take away from the initiatives that Canada has undertaken, and it doesn't take away from the concept of, diversity, equity, and inclusion that we follow here in Canada as well. And to express that, I would also say that this aligns very much with FSRA's own vulnerability framework, because FSRA's own vulnerability framework has a shared focus with IIS on ensuring that there is fair outcomes for all consumers. And it states in our vulnerability framework, including those with diverse needs and those who are at a greater risk of harm. Because at any point in time, if you're diverse, you're vulnerable, the harm that you're exposed to can be catastrophic to you. The impact can be much higher to you. So our own framework too recognizes that, too aligns with IIS. So all I would say is that perhaps we don't need to get caught up into the differences in terms of the words that have been used, but the concepts and the notions and our fundamentals still remain the same, regardless of saying diverse consumers or wide range of consumers.
I love that the notion is still the same, like the end goal is still the same, and that's the primary focus. That's what matters. I think just jumping back for a second, because I asked you some questions about how it's related to Canada, and the paper does definitely talk about, proportionality and jurisdictional specificities. And with CAFI, our members have parent companies and subsidiaries in the US. So I was just wondering if you could explain this dynamic of jurisdictional specificities a little bit more.
Yeah. So, before I even explain this, Robin, excuse me, I'd like to take our members into our consultation process. So this paper was heavily consulted upon at a global level. And when we were consulting upon the recommendations that are contained within the paper, there was a lot of support and a shared belief on the importance of insurance being inclusive, meeting the needs of wide range of consumers, delivering fair treatment. But in the same vein, there was also a lot of emphasis on the relevance of proportionality that led IIS to preserve that concept in the paper and to reinforce that in the paper. The paper makes it very clear that any recommendation that is given, it can be adapted to each jurisdiction's own legal framework. The recommendations do not trump the legal framework that are contained in different jurisdictions. And the regulators, the insurance companies, intermediaries, they can adapt it based on their market conditions, their cultural factors, their consumer needs. So we also added in the paper the emphasis on respective relevant laws and existing standards. So then the two important concepts that really are contained within the paper, as you said, they are proportionality and suitability, which have been stressed enough within the paper. So what does proportionality mean when we talk about the paper in itself? So proportionality in the paper means that we are tailoring the implementation of the recommendations that are contained at the international level to our own jurisdictions. In our case, it is Canada, it could be Ontario, Quebec, to our own jurisdiction's legal structure, to our market conditions, to our consumers. And accordingly, we are adjusting the supervisory intensity based on the risks that we see within our jurisdiction. So that is proportionality. And the second part is the local circumstances. So the paper recognizes that the local circumstances differ according to different jurisdictions, right? Right from the legislative mandate to cultural norms to market maturity. And that differs in the way the consumer needs are identified in particular jurisdictions and what fair treatment could look like in different jurisdictions. So the paper really stresses on this concept of proportionality, local circumstances, jurisdictional specificities, because it emphasizes that jurisdictional laws, privacy rules, existing codes must all be respected. And that comes from the very basis of acknowledging that some consumer profiles and what counts as mainstream can differ based on countries. So for example, we saw that Japan has a very homogeneous population, but that may not be the case for all the different countries. So what is mainstream for one country cannot be the mainstream in other country, and which is why it's important that any of these recommendations be adapted, taking into account your own environment and your own jurisdictional specificities, Canada for us and Ontario, say, for FSRA.
That's great. I was just thinking too, while you're talking about that, local circumstances differ within Canada, but even like within Ontario, it's so these jurisdictions, everything is so different and we're all unique, right? So it's just, I think it's great that the IIS has clearly really thought about this and brought that into the paper because it's needed, it's necessary. Slight pivot, kind of, I see the connection with, jurisdictional specificities and then insurer autonomy. But I was going to ask, these are two important principles. The two important principles in the paper are autonomy for insurers and then risk-based pricing, which to me, this all connects. It all goes back to obviously the fair treatment of consumers, but how can we honor the people that we're looking at, we're serving? So I was just wondering if there are any examples within the paper that show these principles, that show how these principles can be applied to promote, accessibility and fairness.
That's a great question, Robin. And, it's funny because when we were working through this paper, and during consultations, I think we kind of scared, not exactly scared, but made some of our stakeholders uncomfortable because they want to do the right thing. They want to serve, a wide range of consumers. We are talking about Canada and the populations being underserved when it comes to insurance. But they started asking us questions that, does that mean we would not do risk-based pricing? Does that mean we do not have the autonomy to decide who our target audience is going to be, who we want to sell to, who we don't want to sell to? And that is why the need emerged of us wanting to clarify in the paper that we are not telling insurance companies or intermediaries or anyone in the system that you should not be following risk-based pricing or the models that you've developed for your institution in terms of which clients you want to take on, which policyholders you don't want to, how you want to assess risks, how you want to define your premiums. That is not what IAIS is saying you shouldn't be doing. You should continue to do your risk-based pricing as an industry, is what the recommendation is. And again, the insurer should have the autonomy along with its intermediary to decide which kind of target population it wants to serve, the target audience that it doesn't want to serve. But what we are trying to say in this paper is, can we just think about different ways that we can promote accessibility and fairness, understanding the parameters of risk-based pricing, understanding the parameters of insurer autonomy. That doesn't go away. So there are just some examples that are food for thought for the industry to consider. And I'm just going to share some examples that we've explained in detail in the paper. So for example, we are talking that, okay, fine, you have risk-based pricing, you have insurer autonomy, but are we as an industry, are we using the latest medical and statistical insights instead of outdated assumptions? That doesn't require an organization to change its model, but can we rethink, are we collecting, the right information? Can we re-examine some of the proxy measures like zip codes or age to ensure that they are not bringing in any kind of unfair bias, and consider instead opportunities for more accurate and fair measures of an individual's risk? Can we monitor technology to see that there is no discrimination when it comes to different algorithms and how consumers are assessed based on different algorithms, right? Can we use data and research to say who are we serving and who are we missing out? At least let's formulate a baseline understanding about that. Can we expand our product ranges? Is there a way for us to be able to possibly modify exclusions? Can we improve accessibility for customers within our own pool, maybe through language options, maybe through inclusive forms? So these are just some of the examples that we can think within our own parameters to say, can we do better when it comes to wide range of consumers? And the paper also goes one step further, where it discusses forward-looking measures like the right to be forgotten, where the paper thinks about this concept that after a certain time, can insurers agree to disregard past medical conditions when setting premiums? We're talking about old medical conditions that do not exist in the current environment or in the current situation of an individual's life. And this kind of shows that there could be a possibility of considering fairness that goes beyond a strict actuarial tradition and perhaps a tangible example of balancing commercial and societal goals. So that is what the paper is looking at, that let's respect insurer autonomy, let's respect risk-based pricing, but let's stretch our thinking to see what are the possible avenues that we can serve the underserved population and make it fair for a wider range of consumers, which brings us back to the theme of societal resilience.
Great, thank you, Swati. We have a question in the chat that I'm sorry, I just noticed it now. So someone asked, Anonymous asked, going back to the first principles, what is unique about the insurance sector that requires regulation to achieve the fair treatment of consumers? And then they also ask, are there any market failures that prevent market mechanisms from working? There are mechanisms like reputation, desire to ensure repeat business, as well as the OLHI and courts for recourse.
Okay.
I can repeat anything as well. If you need.
Yes, no, so I think I can see the question. So
Perfect.
the first one is going back to the first principles. What is unique about the insurance sectors that requires regulation to achieve FTC? I think FTC should apply to all the sectors. And even when we were developing the paper, we said that the principles that are contained within the paper, be it sound advice, be it managing your claims appropriately, complaints resolution, it just doesn't restrict to any particular sector. I'm sure it doesn't restrict only to OLHI. It also goes to GEO. You can apply these similar principles in any sector. You can apply that even in the mortgage brokering sector. You can apply it in loan and trust. You can apply it in pensions. Of course, you'll have to customize it for the sector, but you can apply it. But why this regulation happened is because of the kind of examples that we saw. Insurance is a complex product, so it needs to be understood properly by the consumer, especially in the life insurance sector. Once you sign up for the product, it's a very, very long-term contract, generally 20 years, 30 years. So because of the nature, size, complexity of the life and health insurance industry in itself, or the insurance sector overall, it was important to regulate it in light of the risks and, as I said, some of the examples that we were seeing in the marketplace. And the second question that you have is that, are there marketplace failures that prevent market mechanisms from working? There are mechanisms like reputation and desire to ensure repeat business and courts. Yes, I mean, I would say based on the experience that we've worked, at the international level, the failure that we've seen is the disconnect from design to what actually gets sold at the consumer level. So the strengthening of the intermediation chain and any kind of loose linkages within that is the failure that we've seen, where a consumer has been sold a product which the consumer could not sustain or did not serve the consumer's needs. So the main thing, I would say, the main failure is the notion of where we started with the product in terms of the design of the product and the purpose with which we started. That communication broke down when it came to the distribution of that product, and further to when the agent sold the product to the consumer. So that's something like a systemic issue which we've seen at a worldwide level. And that's just the market mechanism, because you have too many distributors, too many insurance companies. It is a complex web that we are working with. But I think if each one of us does our part, and if we start to self-assess ourselves against, some of the recommendations that are contained within the paper, we will move the needle and get to a better place in terms of the consumer outcomes that we are looking at. And when that happens, I think the potential of getting repeat business on a long-term sustainable basis is much, much higher. Robin, does that answer the question? Am I missing any part of the question?
No, I think that was an excellent. Yeah, that was great. That was really interesting. I think that answered it great. I should also clarify. So, Swati, if there's any more questions we get in the Q&A, I'll read them to you. So don't worry about monitoring that. And I should have said that at the beginning of the webinar. So my apologies. So we can just dive back. And yeah, please, anybody in attendance, keep asking questions. We love them. That was great. So just turning back to the paper, how does the IAIS paper take the fair treatment of consumer principles as contained within, because you mentioned the ICP 19. So how does it take those contained within the ICP 19 and turn them into practical steps across that full product lifecycle, which you also spoke about as being an important thing of being like, you can't just have the fair treatment of consumers at the beginning, or in theory, it needs to be across the whole life cycle.
Yeah. So, when we saw the different examples across the world on how consumers were treated and unfair examples of consumers being treated, we tied it back to the ICP principles. We said, okay, ICP 19 has around 12 principles, but what are the principles that are really not being met through the examples that we've collected of unfair treatment towards diverse, vulnerable, underserved consumers? And there were three principles that stood out. That's ICP 19.1, 19.2, and 19.5. So the first principle is acting with due skill, care, and diligence when dealing with customers. That's ICP 19.1. ICP 19.2 was establishing and implementing policies and processes on fair treatment. And ICP 19.5, a critical ICP, was, are we taking into account the interests of different types of consumers, either when we are developing the products or when we are distributing the insurance products? So based on these three ICPs, and that actually is the heart of the paper, we divided our recommendations into 4 categories. And in the interest of time, I wouldn't have the time to go into the details, but as I said, that is the heart of the paper. I'll give you a high-level insight into what those 4 different categories of recommendations are. So the first category is governance, the business culture in itself, because IAIS strongly believes that unless and until you embed fair treatment of consumers as part of your business culture, we cannot achieve fair treatment of consumers throughout the product life cycle. So what it means by governance, business culture, embedding, the principle of fair treatment of consumers for a wide range of consumers is that we need to have a policy framework that explicitly addresses different customer needs backed up by controls, reporting, and monitoring. We need to have a strong compliance and risk function that is just not a checkmark exercise, but actually helps address unfair treatment for a wide range of consumers. It's important that when we are on this path of treating a wide range of consumers, we have psychological safety for our staff to address issues by encouraging an open feedback and remediation culture. And last but not the least, having all of our staff, well trained and aware about potential unconscious biases and cultural sensitivities that may come in when dealing with consumers through the different stages of product life cycle. So that's the first category, that how can we have a bit of a cultural shift to be able to cater to a wide range of consumers. Then we get into three main components of the product life cycle. So the first component is product design. So in product design, what we are asking the global industry to think is that, are there certain consumers who should be a part of your product design, who should be your target audience? But more importantly, have we considered that are there consumer groups who should not be a part of the target group? Have we excluded some of the consumers because the product may be too risky for them, as the product's complexity is very high or the claims threshold is very high, right? So the paper also recommends that while the design stage is on, it is important to test the different products, to run pilots across different panels to really test that whether the product is meeting the needs of diverse consumers, the real consumer needs. And then also to think about evolving technology, because technology is changing. As I said, there are complex algorithms. So are there particular consumer cohorts that are being excluded without a sound risk-based justification? So there's a spectrum that needs to be balanced, a spectrum of, yes, you have to ensure that consumers are not excluded, but if certain products are risky for certain consumers, then that also needs to be taken into account as part of the design. Then it goes into sales and distribution, where we are again talking about, are sales and distribution practices meeting the needs of different consumer types? Are they avoiding inappropriate sales? What kind of marketing materials are being generated? Just to make sure that it is truly reflective of customers' actual circumstances, the sales tactics that have been applied and the distribution methods that have been deployed. And last but not the least, the end of the product life cycle talks about after-sales servicing, because we all know that fair treatment doesn't stop when the policy is sold. It continues through after the product is being sold as well. So the paper contains examples on how claims and complaints processes can be made easily accessible and easy to navigate for all consumer types. And ultimately, for us to reach in a position where we can create a feedback loop on where customers' experiences reside and how that customer's experience, again, informs the product design and the product distribution improvements. So I have really just skimmed through this entire section, but if you read through the paper in the detail, you will be able to clearly see the 4 categories, from culture to design to distribution to post-sales servicing, and solid recommendations in it against which all of us can self-assess ourselves, be the supervisors, the industry members, insurers, intermediaries, and associations.
Yeah, no, Swati, you're condensing so many complex things and detailed things into a small amount of time. So this is excellent. Thank you so much. We do have 2 really interesting questions in the chat. So someone asked, FISRA has published multiple observations they found during supervision of MGAs and insurers. And they ask, are there any observations or examples of unfair practices that you, Swati, found internationally at the IAIS, but that were not captured by FISRA during their supervision of MGAs or carriers?
Yes. And I'm happy that we didn't find all the examples only in Canada. There were a variety of different examples that we saw. In fact, Canada is good on the maturity scale. We have examples from all over the world, but one example that really stands out in my mind at the moment is an example from Asia Pacific, where very severe surveillance techniques were used prior to paying out a claim. And those severe surveillance techniques were used even before explaining the claims management process to the consumer, or even trying to get basic information from the consumer. So it wasn't progressive. And that kind of experience is something that we've not witnessed in Canada in our reviews of the insurers and MGAs. And I know CLHI is also on the webinar today. And we in Canada take a lot of pride in the way we pay out our claims and the way we treat our consumers when it's the most critical phase of their life. But that's not the experience internationally. The claims management practices took me by surprise, as an example.
Wow. Yeah, that's tough. That would be sad to experience that at your work, the
Yeah.
hardest time of your life, and you're probably making a claim, and then you have to go through that. That's very difficult.
Mhm.
We have another question. When regulators perform assessment of insurers' compliance with the fair treatment of consumers, how do regulators assess compliance? So how do they do this? Principles, excuse me, are broad, and it's not always clear how compliance can be operationalized at the ground level.
Yeah, that's a very good question. And even as regulators, we had that challenge because when ICP 19 launched, from a theory perspective, it all appears very good. But when it comes to operationalization, it was very abstract. So what we did as regulators is we took every element of ICP 19, every principle of that, which, as I said, is also a part of CCIR guidance, and we developed, for lack of better words, an audit program or a regulatory program design to understand how we can operationalize on it. So what do operationalization steps look like, be it governance, be it distribution, be it review of marketing materials, be it claims management, be it complaints management. And to that effect, we've also published, FSRA's approach on how we would be supervising against some of these guidance requirements or against some of these principles. And after we conduct the supervision, just to help the industry and to help the industry benchmark themselves and to really understand that what do regulators mean by operationalization, we've also published our consolidated results in the marketplace. It's not a perfect science. It's not a checkmark approach because the nature, size, and complexity of different insurance companies, their products differ. But at the same point in time, our goal is to be as transparent with the industry to see from a regulatory perspective, what does operationalization look like, which is why we've published our approach guidance and which is why we publish our practical recommended reports to say what are the gaps that we see in the alignment of the principles that are contained within the ICPs, within the CCIR guidance versus what is it that we are seeing on the field from a supervisory standpoint.
Yeah, that makes so much sense. If somebody wanted to find a list of the possible unfair practices that may exist in Canada, where would you point them to? Would you point them to FSRA? The IAIS paper, I guess, talks about general global things, but is there a place for Canadian unfair practices to look?
I don't know if there is a consolidated repository that contains all the unfair practices that exist in Canada. But what I understand is that all of us regulators at a provincial level, we do periodically publish our reports and our findings into our websites, through different public platforms. So that can be a good avenue to understand where unfair practices reside. I know at FSRA, we've had publications on students that were missold policies. We've had publications on certain immigrants. We also have our consumers office that does a lot of research on, vulnerable consumers, and some of those research reports are also being published. But yes, I think this is a good idea, perhaps, that we can take back to the CCIR level to see how we can consolidate some of these unfair practices, because at this moment we have it, but it's sporadic between the different provinces.
Yeah, that makes a lot of sense. It would
Yeah.
be in an ideal world, we have it in one spot for everything. But again, speaking to
Yes.
jurisdictional specificity, it's hard to consolidate everything into one spot when there are a little bit of differences there, here and there.
Yeah.
One more question, which I think is an excellent question. When determining the target customer of a product, if we are excluding a group of consumers, how can we ensure that this is not viewed as discrimination?
So I think you should be able to rationalize why you're excluding certain consumers, right? Is it because of a pricing consideration? That will still not count as an exclusion unless and until your law requires, to price certain consumers. Or is it because you actually think that the product is not suitable for the consumers? We've recently learned about, some organizations in Canada through our regulatory reviews who decided to exclude certain vulnerable consumer groups from selling some very complex products, I would say relatively complex products. And that's a good decision, because if you can show that these products are not suitable, or the lapse rates associated with these products are high, or the historical trends show that consumers cannot afford these products or sustain these products for a longer time, or there are needs that can be satisfied through a simpler, say, term insurance rather than a product which has a heavier investment component associated with it, which generally is better for high net worth individuals. As long as you can rationalize and as long as you can explain your stance, then that is, in my view, not counted as discrimination. Robin, if you have any insights, I'd love to know that as well, but that's my thinking.
Well, it sounds to me like what you're saying is that sometimes the exclusion of a group of consumers is actually in alignment with the fair treatment of consumers, because it's like you don't want to buy a product that ends up hurting you or being unuseful down the
Yes, yes, or a lost opportunity cost. Even at FISRA, we've published a report on harmful practices that we've seen in selling of certain products. So it would be very good if the industry just assesses who's suitable and who's not suitable. I know that in Australia, you're actually required to publish before releasing any product as to who is your target audience for that product and who's not. So I think it's a good step if it's coming from a place of assessment of consumer needs.
Yeah, that makes so much sense to me. And I think some of this, we're almost out of time. We have a few more questions. I know I'm curious because I think a lot of what we're talking about also makes me think of financial literacy. So I was curious to ask you, and maybe this is a silly question, but what is the balance between public responsibility for their own financial literacy and insurer responsibility? I was wondering if that came up at all during the research for this paper, if the IAIS considered being like, some of this is just on the public, they need to educate themselves, but some of this is very much insurers' responsibility to the public.
There was no clear demarcation that was made between insurer responsibility and public responsibility, but there was, of course, a lot of discussion that not a single player in this ecosystem is responsible for all of consumer education. Nor can we expect that the consumers would just, because we are doing our research and studies, will understand, their products better. So at IIS, it was a lot of joint discussion. We also had an international consumer advisory panel where we said it has to be a collaborative effort with the regulator, the insurers, the intermediaries, some consumer representatives that can elevate that conscious effort of understanding products better and making the products work for the needs that the consumers have. So yeah, there was no clear line, but there is a lot of understanding of this common effort that needs to take place to elevate that understanding.
Great. Yeah, thank you. That does make sense. And November so soon, and that's Financial Literacy Month, so I had to throw a question in there.
Yeah.
We only have a minute left. Swati, we could keep talking about this. This is fascinating. Thank you so much for your time, and for answering all of these questions and letting me pick your brain. I'm just going to ask Keith to join back just to close out the webinar. But yeah, Swati, this was fascinating. Thank you so much. And thank you for distilling so many complex topics and things into a very accessible, 60 minutes. So thank you so much.
Thank you.
Keith, over to you.
Excellent. Well, I really did enjoy that, Swati. And on behalf of Robin, myself, and our board of directors, I just want to echo how much we appreciate your participating in this webinar with us, sharing your insights. It's Really much appreciated. And I'll just end by mentioning that in conjunction with what Robin mentioned about Financial Literacy Month on November 27th, we're going to have our next webinar with Manon Bombardier, who heads up financial literacy and research at the Financial Consumer Agency of Canada, or the FCACs. So we hope many of you can join us for that. Thank you again, Swati, and to everyone who's attended today. Have a great rest of your day. Take care. Bye-bye.
Bye. Thank you.